Thanks. Right, so the last session before we go home, let's try and keep this fairly high energy so we don't all fall asleep. I just spoke at the last session, but one thing that I'm really keen to understand, and one thing that's very exciting about some of the financing opportunities we're talking about today with the development financing, is the fact that this money can really change energy systems. It can really change the way in which we think about energy systems and allow utilities and allow different countries to think about how they develop and deploy renewable energy as they haven't before. And storage is an enabler of all of these different technologies. There's some incredibly exciting business cases around, as I touched on in the last session, with displacing high carbon, expensive conventional generation, supporting our systems, and also with replacing aging infrastructure. And engagement with utilities and regulators is more important than ever in order to help people understand the value that storage can add to the system. But more importantly, what we want to touch on this session is how do we get that money into these projects? What is it that we need to do as an industry to help the money go and help these projects actually get built? So we're going to touch on a variety of points around the role that CTF funding plays, around the role that commercial and development finance will play, looking at the real opportunities for storage and how that differs between on and off grid applications as well. So those are the key areas that I want to touch on over the next sort of 25 minutes with the panel, and then I'll open up the audience to the audience for questions. So I've told you the areas we're going to try and cover. So if you've got any other questions as well, then have them prepared. Before we start though, I'm delighted by who I've got on the panel today. It's always difficult when you get asked to chair a panel because you don't know who you're going to end up with, but I was very happy with who we've ended up with on this panel. So I'd like to ask each of these panelists to just for 2 minutes introduce themselves, and at the same time tell us why you think storage is important in our energy transition. So Hassan, would you like to start with you?
Yeah, sure, thanks. Good afternoon, everyone. So I'm Hassan Bali, and I co-founded a company called Ion Ventures, and having spent about the last sort of 10, 12 years working in clean tech and originating carbon markets, moving more towards renewable energy, I've seen a lot of the frontier markets evolve, and the big challenge in all of them is always how do you link finance to opportunities. So myself and my colleague Dan Taylor, we set up Ion Ventures because we think we've got quite an important role in helping to propagate knowledge and commercialization experience of energy storage, particularly in transferring a lot of that know-how from this part of the world, particularly the UK, where we have quite a lot of experience, through to Southeast Asia in particular, where we see there's a vast opportunity through growth in electricity demand, general electrification, and some of the challenges on accessing rural and island communities. And energy storage, as has been sort of touched on in some of the previous sessions, can play quite a strong role in both encouraging the deployment of clean, sustainable, and let's say stable pricing around electricity, but additionally it can help in decarbonisation, decentralisation, and some of these key trends that we see. So our role is a combination of being an expert advisor, and we work with large utilities internationally on a lot of things around flexible power and how to integrate it into their systems, but we also do a lot of work on project development and commercialisation, and then linking that to finance. So particularly in places like Southeast Asia, our function is to work with local typically IPPs that have good experience in developing projects, but don't really know and understand the intricacies of energy storage and how to link it with their existing technologies to produce hybrid solutions. And it's really then about appointing the right technology in the right place for the circumstances that exist. And so we feel that storage is one of those linchpins that is to date relatively highly talked about, relatively inadequately understood, and as a consequence, finance doesn't necessarily flow to the right kind of opportunities because there's that disconnect. So our function really is to help propagate more storage, more investment into storage, and off the back of that to build up our own asset base over time.
Okay, thank you very much, Hassan. And Daniel, if you'd like to introduce yourself.
Yeah, thank you. My name is Daniel Widmore. I work for ADB, Asian Development Bank, in the private sector finance arm for infrastructure. So I had the team in Bangkok covering the Mekong region, that's Vietnam, Thailand, Myanmar, Cambodia, and Laos. And I'm with ADB for 15 years. I've been involved in the first renewable projects that ADB financed, always from a private sector side. And now we work on some project with storage. And so also been able to see the evolution of CTF during those years.
Brilliant. Okay, thank you. And Zoe?
Thanks. I'm Zoe Norgate. I'm Deputy Director for International Climate Finance at the UK Department for Business, Energy and Industrial Strategy. And my department, BASE, is the department has responsibility for our domestic climate policy and trying to meet our net zero targets in the UK. And we also have responsibility for international climate action. And my team oversees around a £3 billion portfolio of projects in international mitigation and in working in partnership with developing countries to address climate change, which is part of the UK's wider climate finance that we provide as part of our obligations commitments under the Paris Agreement, which we do in collaboration with the Department for International Development as well. And our interest in energy storage, really our mission is to support developing countries with this transition. We're very focused on the level of ambition and urgency which is required to get us anywhere to the Paris temperature goals and that trajectory. So we're looking at, we've already through, for example, as the largest donor to the Clean Technology Fund, have in the last 10 years been supporting that sort of initial wave of large-scale renewable capacity deployment, but actually looking at how countries will get to higher levels of renewable energy penetration. Energy storage is a really obvious thing that will be needed in that journey, and for that reason, we recently announced at the UN Climate Action Summit that we would commit £200 million to launch this new global energy storage programme through the Climate Investment Fund. So we're really excited to see what that can achieve.
Yeah, that's great. Thank you, Zoe. And then Chris.
Thank you. Thank you very much. It's great to be here. So Chris Kamenker, I work for Lombard Odier. We're one of the older and larger of the Swiss private banks, so in the private wealth and asset management industry. And we have conviction that sustainability is going to be one of the major drivers of risk and return in the decades ahead. We use sustainability integration techniques across almost our entire asset allocation. And so when you think about energy storage and why would I come here today and why have I been interested to hear all these different perspectives? Well, we view the financial markets and economic growth and opportunity through the lens of risk and return. And we're in the midst of an energy transition and a mobility transition. So energy storage is central to us. Really, we need to understand the trends. We need to understand the dynamics from the risk side. There are already examples of how industries are beginning to be disrupted by energy storage and its potential when you see cost down curves of 85% over the last decade and energy density improving and improving. And it looks like those cost down curves will continue. This is an area that's ripe to disrupt the incumbents in the industry if they're not nimble and don't move. So from a risk management perspective, it's essential that we're on top of these trends. From an opportunity perspective, I don't know if the numbers came up earlier, but we're well aware that BNEF estimates that there will be a need for $660 billion worth of investment in energy storage over the next 2 decades. So that's not an insignificant amount, about $30 billion per year, and it would be very, very interesting to try and find ways to access that investment stack for our clients.
Brilliant. Okay, thanks, Chris. And then Shrey at the end. I think, if you'd like to introduce yourself.
Absolutely. So my name is Shrey Kohli. I head up debt capital markets and investment funds at the London Stock Exchange Group. So anything that isn't straight equity, which has to be funded through public capital markets, usually falls within my area of the London Stock Exchange. And I completely echo Chris's point. A lot of people ask me when I attend conferences like this, why isn't there sustainability in your title? But the reality is that sustainable finance is very mainstream now. As part of my responsibility, I head up the sustainable bond market at the London Stock Exchange, and this is the first year that over $100 billion of green bonds have been issued in the first half of the year, and we're well on track to about $200 billion being issued this year. One of the areas which can be funded through green bonds is not just renewable energy projects, but energy efficiency projects and storage, which is one of the reasons why I'm here, to talk through some of the examples that we've seen out in the marketplace. But the relevance to emerging market countries, and Harsh's example from the previous conference, previous panel was, it hit a nerve because I grew up in India, And half the time my father spent once the electricity supply went off was turning on the diesel generator. And there will be a massive change now in terms of funding the transition from fossil fuels to renewable energy. And developed markets like the UK can offer examples as to how straight equity can fund projects within the energy storage space as well, which is something I'm keen to talk about.
Brilliant. Okay, thank you very much, Ray. A few of you touched on the word disruption there, and storage has been part of the disruptive technologies as McKinsey announced it about 7 or 8 years ago. And in fact, my favourite quote is, "Disruption will either happen to you or because of you." And I think that's an amazing thing that shows how we should get involved. And I think on that point, Daniel, I'd like to start with you. I'd like to understand what the potential opportunities and challenges to financing storage technologies are.
Okay, so I'll start with the challenges,
Okay.
Which doesn't mean that they will not be addressed over time, but they're clearly in emerging, and it's all focused on Southeast Asia, emerging markets, and then I'll mention some examples of opportunities. The main challenge we see in our countries is first that if you look at wind and solar deployments, that was they benefited from feed-in tariffs. Even in less developed countries, they ended up having a feed-in tariff program. We don't see anything like this yet for storage. Hopefully, it will come. Second, there is also a lack of any payments for frequency and voltage regulation for any ancillary services, so it just doesn't exist. Unlike markets like Germany, Australia, and UK. Third, there is no merchant wholesale market, which will give opportunities for arbitrage opportunities, buy low and sell high. Again, single buyer model usually, with just the same tariff. Third challenge. Fourth challenge is that variable renewable energy, such as wind and solar, are usually not still a low percentage, below 10%, and usually people worry more about batteries for once this becomes a bigger percentage. But there are some exceptions. For example, the Jayapoom and Lopburi provinces in Thailand, where there's a lot of wind and solar projects, including some financed by CTF, and the Ninh Thuan province in Vietnam, where Vietnam wanted 800 megawatt of solar to be installed by last June, and they got 4.5 gigawatt, but it was uncoordinated. People just rushed in because it was this 9.35 cents feed-in tariff, and now there's some areas where they're being curtailed. In terms of opportunities, so where do we see them? One is integrated renewables plus storage, where the model works more easily because you get revenues from the generation of renewables as well. So we're working on one 10 megawatt wind project in southern Thailand in an area where the grid is weaker, more poorer area, which is a CTF. So we're hoping to make a CTF project as well. And there, the project would be curtailed if it didn't have storage, because the grid can only absorb 8 megawatt and not always. So if so instead of blocking the turbines, you can just put it in storage and sell it later. This will also be the first license in Thailand for an energy storage project. So it'll be license 001, and so they still haven't got it. And so it shows also the additional cost that you can have in an emerging markets, because for project finance, the delay in being able to turn on the battery is very expensive. Another project is on Koh Phangan. It's known for party people as being the island in Thailand where there's the
battery, by the way.
there's the full moon party island, and they have a peak load every Friday and Saturday night, and the problem is this undersea cable has capacity constraint, and so all the hotels have to run diesel backup generators, and now it's called a sandbox project to put in storage to address that peak, and Hassan is involved in that as well. We just realized, so that's interesting. And another area is for rooftop, commercial solar rooftop, where now in Thailand you can sell power for 30% discount to grid, but there is no real net metering, so it makes sense to put it on storage first and then consume it in case your demand is less than what you produce. So those are the three opportunities. But still, none of them has reached financial close yet. So we see and hope we can help them.
You had 5 challenges and 3 opportunities. I'm not sure that ratio.
Probably well right.
Okay. And Hassan, actually, so you've worked in some of the developing markets and seen what's happened in the UK, building out storage. And what is it that, and some of the challenges then that Daniel touched on were the fact that we don't have these markets and the same structures in these emerging markets. So what can we do about that? How can we drive storage when we don't have these market structures in place? What can we learn from the developing countries?
I think there's a couple of things. I mean, firstly, one of the main reasons that storage will take a bit of time to get going is at the moment, most of those countries don't have a simple thing, security of supply. There's no obligation to keep a consumer on. And if there's no obligation to keep a consumer on and you get a blip, just switch off. So I think one of the reasons that storage has become quite strongly supported in more mature network systems and mature markets is because there's security of supply. So the system operator has to do something, and storage is a very convenient way of doing that. I think when you get to other countries, therefore, what you have to do is you have to look for commercial opportunities. It's really about how do you make something stack up? Are you going to make a saving somewhere? As we've seen examples of diesel reduction, that's a huge saving. Removing spinning reserve, this kind of stuff can actually give you a real business case for doing it. It's also then about finding parts of the system that are where consumers can't afford to have no supply. And that would then mean that you can go to C&I type customers, you can start talking about piggybacking alongside generation, typically renewable generation, and these sorts of things. And then the other part is remote areas which are isolated, and they have reliance on a supply chain and a price volatility that actually makes these technologies feasible. So again, diesel or heavy fuel oil in island areas is a classic driver, because essentially, by the time you've paid for all the fuel to be transported however far, handled, delivered, pilfered, all this kind of stuff, what you end up with is a very expensive kilowatt hour. So you can then compete by finding a combination of technologies to go directly against that. Yeah. But one word of caution in those spaces, it isn't as simple as just cutting out diesel or heavy fuel oil, because people's livelihoods are linked to that supply chain. So you then have to think about what are the ways in which you transition over time to slowly reduce the reliance on things like diesel. And again, that's one of the things you have to factor in when you evaluate opportunities, where you can put in a certain capacity and then build over time.
Okay, brilliant. No, that's great to hear about some of the opportunities. And Zoe, actually, given these opportunities, I'd be really interested to hear about what you're expecting to see from the CTF fund. What is it that you'd like to see from that fund, and what are the opportunities for it?
So I think why we thought CTF would be a good vehicle to do this type of programming is because the model that has worked well for CTF in the past with other technologies is bringing that combination of trying to address some of the enabling and sort of regulatory policy barriers, and also, country risk where that exists, and also technology risk and financing barriers. So it's that sort of whole package of trying to use incentives of the sort of technical advisory component and some concessional finance to help both create the enabling environment and then do the big first in kind, first in country investment at scale. Yeah. So we would hope to see that happening across a range of countries, and there also being opportunities to learn between different geographies and different MDBs who are involved in that process. I think we'd also like to see, in the way the programme is framed, that working both large on-grid scale and some off-grid different applications, and also hopefully a different range of technologies. So certainly batteries will be a big part, but we've framed it in a technology neutral way, and we'd like to see some of those other technologies coming through as well.
Yeah, okay, no, that's great. And it's good to understand that we want to try some other technologies as well and give them the platform to be able to invest in them as well. And actually, Daniel, perhaps actually you could just say something briefly about the journey and the roadmap for how you see the CTF funding being used. Like, if we looked back in 5 years' time, what's been successful is how the CTF funding's been used.
I think the CTF funding is always useful to be at wherever it's pioneering the first type of projects. So if you look back, we used CTF in Thailand for the first solar projects, first wind projects. At that time, Thai banks could only provide 11 years of financing, and we were at 18 years, and 11 years just didn't make the project work. And so it's really thanks to CTF that we could finance some of the first wind and solar projects. Now that's over. Thai banks can provide 20 years. So where does CTF go? At the cutting edge, which is now integrated renewable plus storage. And so that's our new program now. So the last one was 100 million it's spent. Now we have 36 million from CTF for renewables and storage. And so, so that I think if what would be successful for CTF is if it can be, let's say, the 5 first projects in Southeast Asia, and then also have a role in sharing the experience and bringing the regulators and the off-takers, the grid operators together and share what happened, what the benefits are.
Yeah, okay. And so moving on from the CTF to talk a bit about commercial financing. Chris, please, could you just talk a bit about the role of commercial financing in supporting some of these projects?
Sure. So I guess it's helpful to think about how can finance flow to the storage sector, the different permutations, and we're only going to be active in some of them, but that might help to set the discussion.
Yeah, that'd be great.
So from the earliest stage, you have research, development, demonstration funding, and you see public sector and universities very active there, and that's a key part of it. Then you have early stage capital financing. You can have venture capital there. That's an area where we can sometimes make a contribution, and then as the project itself, as the projects come online, once the company has started commercializing the product, then there's a role for asset financing, and there you tend to see large banks, corporate banks, providing asset financing, as well as the balance sheets of corporates. So corporates financing things on balance sheet. And it's at that point in time where the project itself, you can access that from our perspective as an institutional investor via the listed equities markets and the listed bond markets. And so that's where we spend most of our time. And it's probably one of the largest opportunities for energy storage. The challenge is that you have to be able to get at it as an investor via a bond or a stock. Not every investor is going to be able to make an investment directly in the project on an unlisted equity basis. It's not a liquid proposition, and there are investment restrictions as well that governments put in place. So those are the different areas. You also have private equity. There could be buyouts. There could be infrastructure funds that come in at different parts of that capital continuum. And if I were to highlight a few challenges, I suppose on the listed equity side, as I said, where we spend most of our time and where our clients want to invest a good chunk of their capital, it's hard to find energy storage access there. It's very difficult to reach. There are a handful of pure play companies that are listed on stock exchanges. Most of them are private and they're not listed. You have some very large industrial companies, but again, they're highly diversified. So energy storage is one activity out of quite a few. You have Panasonic, you have LG Chem. And so we can create opportunities that tap into, that indirectly finance that via the balance sheets on a listed basis, but the universe gets very small very quickly, and that's problematic from a diversification perspective. It's a lot easier on the bond markets, I have to say, and we can spend a little more time talking about that, but a lot of good work is happening there via green bonds, and we can chat about that.
Yeah, Shrey, that leads nicely into you, where we're actually quite fortunate on the London Stock Exchange, I understand, because we have 2 storage funds. Could you tell us a bit about those and the role they've played in supporting the transition, the energy storage transition?
Absolutely. So, Chris is right. I think the number of structures where investors can take straight risk in energy storage projects available on public markets is minimal, but there are some options which are out there. One model which works really well in the UK is through a yieldco structure. So effectively, an investment manager sets up an investment fund. The fund buys stakes in one project or multiple projects through SPVs, and then either manages operationally those assets related to the project or co-owns those projects with another sponsor. Like you said, we've seen 2 examples of these funds in the UK investing in assets in the UK, Northern Ireland, Northern Ireland is still part of the UK. The UK, Ireland, Europe, and the US. One of those funds is called Gore Street Energy Fund. It raised approximately 40 million sterling at IPO back in May 2018. Its investment strategy is to invest in lithium-ion storage projects in the UK. And this is an interesting fund because it not only invests in commercialized projects, as in those which are operating, but it also invests in greenfield projects. So 5 projects in its portfolio of 9 are greenfield projects, 2 of them in Ireland. And as part of the project that they're investing in Ireland, the government of Ireland actually bought a stake in the fund. So it's a public fund with public investors, but also an investment by the Sovereign Wealth Fund. So that's a unique example, but there are other examples which are out there. There's another fund called Gresham Street, which invests in energy efficient projects, only operational. It's a slightly larger fund, approximately 90 million sterling of market capitalization. And the yield co structure has been used very successfully in the renewable space. So Greencoat Renewables, which invests in offshore wind and wind energy, has come back to the market multiple times and it's a very large vehicle. The sorts of investors that you see in this, Standard Life Aberdeen has participated in some of these capital raises. There are some dedicated UK investors. Chris is raising his hand. Maybe you haven't seen the full investor book. But there are opportunities out there for such projects to be successful. But there is also a limited set of investors that wishes to take such risk. So I mean, you have to keep the picture balanced.
Okay. And what about the development finance that we're talking about here? So what do we see as the role of development finance in pushing storage in emerging markets? Does anyone want to pick up on that?
If you like.
Yeah.
So I mean, I think development finance has a very clear opportunity to play a very big role in all of this. But I do also think that one of the key bits which is hardest to address is actually not the availability of capital, but what unlocks it to actually invest into opportunities. And this is where it comes to commercialization, and this is the hardest piece. If you look at all of the markets we're talking about, whether it's sub-Saharan Africa or Southeast Asia, where you've got huge electrification opportunity, and storage should be a big part of it, standalone storage, for example, is very hard to fund because you don't have any of those mechanisms that have enabled these funds in the UK, like Gresham House or Gore Street, to exist, which is, they have market mechanisms to fall back on. And if they don't get a long-term contract in one particular service, they can move to arbitrage or something else. And as you pointed out, and Daniel pointed out, there aren't these things already in these emerging markets. So I think the first is a question of commercialization. What is it that needs to be in play? Policy regulation, commercial incentives, that shows that the assets can deliver a revenue stream. Once you can get to that point, you can have a sensible conversation about who will fund those projects. Because without that, actually, you're talking about a wonderful technology, creates huge value, delivers significant value, but the price doesn't reflect the value. Yeah. And until price and value are kind of aligned, you can't really expect to draw down capital. Good case in point, World Bank, $1 billion supporting energy storage. If you speak to them, there's very little that they can actively do that directly supports energy storage projects. In fact, a lot of their capital is diverted towards co-location projects. So a country like Myanmar, for example, their energy infrastructure fund, $400 million US, fantastic, supporting electrification of about 55% of Myanmar's population. The way you get into it is PV. Local community PV, and if in 3, 5, 7 years' time you can add storage, then that's a nice kicker. So the challenge we have, I think, is actually setting the ground first against which the finance can be deployed. And I think that's one of the things where maybe not just providing the capital, but actually providing a mechanism that educates, that brings regulators up to speed, or puts something in place where you can get some sort of a guarantee, an insurance, an underwriting that would ensure that basically if you go into a local community that needs electrification, you're not going to worry about payment risk. You're not going to worry about whether or not the local people will pay their bills on time, because no one will take a risk on that. No large institution will look at that and say, actually, I agree to deploy X million against that opportunity, because fundamentally the internal risk model says, sorry, too much risk there. So you've got to think about these kind of mechanisms. So I wonder whether guarantees, these kind of things might be a good way of doing it alongside private investment and other things like that. So, those are some of the concepts I've been thinking about, and it would be good to see how some of the large actors that can actually make this happen choose to progress the opportunity.
Yeah. And did you want to make a point there, Dan?
Just one thing I thought was quite interesting, the difference between the capital markets here and in Southeast Asia, for example. So we heard that green bonds are going to be 200 billion just on the LSE this year. In Southeast Asia, ADB financed the first 2 green bonds this year from energy companies, and they're relatively small. So it's like it's a world of difference. And really, as Hassan just said, that the opportunities they are not assets that exist that can be traded, etc. It's really the private equity, the small projects where you find in these very small areas where the regulation is okay and it can work. So capital costs are very important for emerging markets, and I think CTF can help with this. So BNF, they estimated that for every 1% reduction in capital costs, it could be a saving of about 1 cent per kilowatt hour coming from storage. And that is really crucial because the off-takers have to be convinced that it makes sense.
Okay. And Zoe, I'd like to understand the difference potentially between how we might finance on and off-grid systems. Do you see CTF playing a role in both on and off-grid systems, and what might the difference be in how that money flows into those projects?
Sure, yeah. I mean, so I think the design of the new global energy storage program in CTF is to include both, and that's partly about sort of inclusion, but also identifying the different development benefits that come from the on-grid and off-grid. So certainly we would see it doing both. It's not particularly my area of expertise, but I think some of the challenges around off-grid, around the business model, around sort of aggregation of scale, all of those things, so it's a slightly different set of factors to the large scale. I mean, just wanted to echo what Daniel and Hassan said in terms of the role of development finance. I mean, the purpose in creating this new fund was precisely to kind of meet that need that Hassan is talking about, to try and bring down, the risk and the cost of that sort of first demonstration at scale program. So that's very much what we've put that money there to do, and hoping to see it happen over the next few years, and also welcoming other contributors to come in and increase the scale of that. And I think both providing that conducive enabling environment, but also accelerating the tipping point. And Daniel referred to the Bloomberg New Energy finance study that was done looking at what the Clean Technology Fund has done in solar, in wind, in CSP, and actually showing you can accelerate that tipping point to at which point the levelized cost of energy becomes competitive, either with new thermal, with replacing existing thermal, potentially by a year, 2 years, 4 years. They looked at modelled, across several different countries. And actually, if you shift toward that curve and you think about the emissions under that curve, of even just bringing forward that whole deployment curve by a year or two, we're talking about a huge impact in terms of climate as well as the wider development benefits.
Yeah, okay. And Chris, do you see a lot of these risks here that we're talking about actually in any projects? And do you see this funding vehicle being a way to help mitigate those risks? Like in 2 years' time or 5 years' time, could you envisage that this finance has brought down those risks to allow someone like yourself in a commercial bank to be able to invest in these projects?
Maybe, hopefully, yes. In fact, I'll go further and say we need that. That needs to happen. But where we stand is on the other side of the balance sheet, and that's where we, as in the institutional community, would probably prefer to stand on the other side of the balance sheet. So all the excellent work that the development banks are doing on the risk mitigation side, de-risking projects and lowering the cost of capital and capacity building and building up bankable pipelines of projects, that's excellent. We'd like to be on the other side of the balance sheet, so put that energy storage project into your green bond framework, please, and we like those AAA rated securities. They could pay up a little bit more, but that's not your fault. Yeah, that's where the pools of capital are. The $100 trillion of institutional capital and the $90 trillion bond markets. They're on the other side of the balance sheet. So we need to find a good way for both of those sides to work together. Sovereign green bonds as well. I've seen storage as a use of proceeds category in a few sovereigns. It's increasingly common in the corporate bond markets, which is great. Some of the telecom green bonds, whether it's Verizon or Vodafone or Telefonica have included it there. We see it oftentimes in financials issuance. So banks are lending to energy storage and then they put it in the framework and then fund it the other side via bond. And we've seen it in agencies, even in asset-backed securities. So let's have the full range of credit instruments and credit risk across the full spectrum, and then you'll have institutional capital coming towards it.
Yeah, okay. Shrey, have you got anything you wanted to add to that on the bonds?
What's even more interesting is that these instruments provide investors a tool to have strategic conversation with those companies or sovereigns which are not involved in these sectors. Right, so Indonesia is a very interesting example where the state-owned electricity supplier still, has about 70% of their portfolio within fossil fuels, right? And they have a pretty large funding program internationally. Now investors are starting to begin having conversations about the ambitions for increasing electricity supply in Indonesia, particularly in areas where supply doesn't reach, for example, Papua and other regions within the archipelago. But that wouldn't have happened without the multilateral development bank. So MDBs have been at the vanguard of the green bond market, the sustainable finance markets. There are new tools that they're developing in terms of allowing investors to co-lend in a private passive manner. More bankable projects being available mean more people like Mafalda Duarte and other investors will be at the end of it. And we can offer a public market for investors to take up instruments which are off the risk return that they so desire. As the LSE, we also play an educational role. So there are a lot of projects within emerging markets where electricity companies or those non-bank financial companies with strong credits can implement green frameworks themselves. And this is another area whereby you can start mapping the need and demand within emerging markets with the capacity that you have for institutional investment in markets such as London and the US. Investors are hunting for yield right now. You're seeing 30, 40, 50, 100-year bonds being issued, which hasn't been the dynamic that has been previously. So if there is an instrument, there could be a supply, but it has to be the right instrument and the right credit.
Brilliant. I'd like to open the floor to any questions. Have we got any questions? And then I would like to pose. There's one down at the front here. If you could just say your name and your affiliation before your question, that'd be great. And if it's targeted to any of the specific panel members.
Ranjiv Gunawardena, Genera Climate Care. In relation to bonds being issued, green bonds, my question is that, what's the situation? Because at the end of the day, from the perspective of an investor, you're looking for a good coupon. And what sort of coupons would you be able to notify the audience here that's being paid?
Well, it might be worth, sorry, just what's a coupon? And it might just be worth setting that out before you answer.
Sure.
Do you want to have a go or should I?
Well, most bonds have coupons, unless a zero coupon bond or a structured product. But yeah.
You see a range is the answer, and it really depends on the credit that you're investing in. So just as a tool, a green bond is any bond instrument where the use of proceeds, partly or fully, can finance or refinance eligible green projects. It's quite a mouthful to say that if you have an asset which qualifies, you can fund it through a green bond. But from a legal perspective, the instrument itself is identical to a bond. So if you're investing in the ADB, for example, an ADB green bond, you're investing in a AAA rated credit in the tenor and currency that you are investing in. If you're investing in a greenfield project green bond in India, then probably the risk return is much higher, 8-9%, depending on the country risk, the currency, as well as the credit of the project. So the pricing is quite similar to the normal bond instrument space. The credit is where you get your return. Now, there was an interesting debate as to whether green bonds should give you a higher coupon than normal bonds, or whether from an issuer perspective, it should give you a lower coupon because you are implementing a green framework, you're keeping yourself to higher standards. And I don't think that debate has been answered yet, because statistically you can't prove either way. But there is now evidence of a green halo, as in if an issuer issues a bond in a green format, then because they're dedicated ESG investors, they wish to hold that asset in the secondary market, so it tightens its pricing. So there are a few factors in play here.
How comfortable are we that storage fits in the rules or whatever it is in a green bond? Like, is that 100% fine, or is that still a murky subject?
Look, I mean, there are two answers to that question. There is only one market that is fully regulated in the green bond market, and it's China. There's a green projects catalog, and energy storage is in it. There's another one under development. A lot of people have been talking about the EU taxonomy, and energy storage is unambiguously in there as well, with a big checkbox next to it, and no, particular threshold, from what I could tell. Others might have a more granular understanding. And then the way the market has developed over the last 10 years, well, really since 2014, is through the marketplace coming together, issuers, investors, and underwriters, as well as the key aspects of market infrastructure like the stock exchanges, to agree on what should be the rules of the market. And the green bond principles have been the overriding and most successful mechanism there. And energy storage is included under the energy efficiency category of the green bond principles. So I think it's a fairly straight answer.
Good, that's what we like to hear. Straight, no one's, and we like certainty. Is there any other questions from the audience at all? Must be. We've got. Okay, there's one at the back. I can stay here all day and ask questions, so don't worry if you can't think of any.
Hi, Marvin Tabby, Westlife Energy Solutions. Just a quick question, not so much to Hassan, but to the rest of you. If the science is true, and I guess we're all here because of the science, and we've got 10 years to kind of get below the thresholds, do you think your industries are kind of working hard enough to innovate on the instruments you deliver and the products you're offering?
Specifically to sort of support storage?
Yeah, to support storage, well, anything, whether it's adaptation, resilience, whatever.
Yeah, okay. Anyone want to take that question?
Can have a go.
Thanks, Shrey.
I mean, so I think the short answer is that wholesale finance is trying very hard. There's over $100 trillion of assets under management now signed up to the UN Principles of Responsible Investment. Over $35 trillion of assets under management have ESG in some form incorporated in its manner of investing, either passive or active. Then now investors are steadily excluding certain industries that they don't wish to fund, which is creating very interesting conversations with those brown industries which are responsible for a lot of greenhouse gases as to how their executive pay is aligned or how their funding structures are aligned. And to be fair, if you had this conversation 3 to 4 years ago, when you'd ask an audience, have you heard of an instrument like a green bond, they'd rather, most of the people wouldn't know than no. So I think we have reached a tipping point, particularly when at the LSE we held a massive sustainable investment summit. At the same point of time, the Extinction Rebellion was having its protests in London. So this is in popular thought now. Will it ensure that in 10 years we hit certain targets? I don't think we can give an answer to that, but it's certainly a different situation that we're in than we were a couple of years ago.
Yeah, okay.
Maybe I'd like to add to that. I think in terms of impact per dollar, green bonds, because the price differential is not big between green bonds and others, is less than CTF, for example. So I think like the UK's commitment for 100 million for CTF, I think that has a bigger impact, because we on the implementation side, we can really, and it's conversations we have with sponsors, tell them, how about storage? If you include storage in your commercial rooftop project or in whatever project, then we can help you with better financing. So we're pushing them very actively with this type of financing.
Yeah, okay. Oh, go on.
Well, were you going to?
No, go ahead.
I was just going to say, I understand the comparison, but I'm not sure it's the most useful comparison to be made in the market, because quite frankly, if you're comparing green bonds with some other type of instrument like a fund, you're not even comparing apples with oranges. You're comparing apples with something completely different, bacon sandwiches or something. So honestly, the question there is, and I understand and I appreciate the metrics and evaluating impact, and we should do that. We do that as well, by the way. When we look at investments, we try to assess the different impact of them. It's a question of, do you want fixed income portfolio managers involved in the transition, which hopefully we'll be able to make in the time frame that we have for the carbon budget left, or do you not want them involved? Because fixed income portfolio managers are going to buy bonds and invest in bonds, and they're not all of a sudden going to reinvent themselves to invest in other types of securities. That's what they do, and that's a $90 trillion market. So it's more of a binary, I would suggest, and we can have a discussion about it. And the other point I would humbly suggest is that we are working very hard in the finance community, perhaps some more than others. It's difficult to understand exactly the extent to which different parts of the finance community are making a contribution. And we're trying to innovate, we're trying to price risk and assess risk, but ultimately the fact that we're not on track in terms of the nationally determined contributions, we're not on track because of policy ambition. We need, we'd like to see much higher levels of carbon pricing. We'd like to see net zero legislation in more countries. That's a great start. That type of policy ambition will help bend the trajectory to where we need to get to, and the finance community will bring capital to that.
Yeah, okay. And I just want to pick up on a point, Zoe, you made, which is about learnings. My understanding is part of the role of the CTF fund, as you were explaining it, is about how we share learning. So if, for example, we're financing or building or operating an asset in Africa, and then we want to be able to learn how we do that in a Southeast Asia country, or whether it's in South America, does any of the panel have views on how we should be doing that, or what kind of things we should be learning? Do you want to start?
Well, yeah, perhaps I'll kick off, and also just to sneakily answer the previous question as well. My answer is yes. I think we're certainly trying. Obviously, in the UK, we have in legislation on net zero target. We're desperately figuring out how exactly the best way is to deliver that. And in terms of international activity, so we've committed to doubling the climate finance we provide to developing countries to 11.6 billion over the next 5 years to try and ramp up that support. And are very focused on actually how does that enable countries to ramp up the ambition in their NDCs in every 5-year cycle around doing that. In terms of learning, I mean, one of our sort of key objectives in setting up the climate investment funds was not just to sort of kind of kickstart this transition, provide those incentives for the MDBs to be able to have those conversations about how to accelerate that shift that needs to happen, but also to be able to use it as a kind of learning platform and laboratory. And so there's a big component of funding within it for something called the Evaluation and Learning Initiative. A lot of different studies, including one we were talking about from Bloomberg, New Energy Finance, have been funded through that to actually look across different markets and understand what was the impact of the program, what's worked, what hasn't worked. So there's this huge body of literature now looking at what's worked and sort of case studies around different types of investments in different contexts. And I think part of that learning as well is the value add of sort of in the climate investment funds and bringing all the MDBs together is creating that conversation that can happen between the banks, sharing experiences across different geographies, but then also where we've sort of seed funded the first in kind program through one of the banks, that they can then also replicate that more widely through off their own balance sheets, as some of the risks come down. So I think we'd like to see that continuing through, in terms of energy storage, and also the energy storage partnership being a sort of wider platform to spread that learning.
Yeah, Daniel, did you want to touch on something?
Just to be clear with Chris, I didn't mention that green bonds are not useful. I think they're very useful. And one was the impact per dollar, but this is public sector money, right? It's not. We don't have billions of this. So CTF is not something that you can just transform into the mainstream. But green bonds are mainstream or becoming mainstream. So of course the trillions are very important. And so volume times a little bit of impact is extremely important because the volume is so big. Yeah.
And Hassan, you've done some projects here and working on some projects in Southeast Asia. What sort of practical learnings or operational or development learnings do you think we can look at?
So I think one of the things that I do is out of Singapore, I chair a committee which is run by the Energy Institute, which is a UK organisation which is spread internationally, and that's a committee on on energy optimization and storage, and it's specifically looking at how to engage with local stakeholders. So as opposed to a sort of top-down approach, it's going out and meeting other developers. Yes, it is meeting with regulators. It's also meeting with local finance houses, but the view is to try and get a local industry and local market participant view on what they specifically would like support with. So rather than saying, well, we've done all of this, you should do the following, it's about saying, well, look, these are all of the things that have happened. Where are you finding challenges? What are your interests in these topics? What are your interests in the technology? Where do you think you have challenges on regulation? And actually letting it be the case that there's a much more bottom up, because they understand their local conditions far better than we do. And this is one of the reasons why in all of the projects we're active in, we are not the principal. We're working with local developers that have experience of dealing with everything from the local community through the regulation, getting sites permitted, etc. And I think that is a much better way of percolating up knowledge and then bringing in the right bit of experience that's been had elsewhere. So for us, yes, a lot of that is UK, and actually a lot of it is what not to do. Because frankly, in the UK, the last 3 years around energy policy has been so tumultuous, it's almost impossible to actually say what the right role for energy storage is. The reality is that these funds that are listed have got there in spite of the market. And I think, it's worth saying that. And that's my view. And I think if you understand what's gone into those projects and you see how they operate, in actual fact, they're pure merchant risk now. They've had a phase where they've had level of support, they're now merchant risk. And actually, if you then narrow that down to the kind of institutional investors that will be buying into that share, you'll find that it's educated investors. It's not sort of a broad allocation across any type of portfolio, because actually when people look under it, they see merchant risk and they panic. Yeah. And that's my direct experience of speaking with investors in all of these areas. So I think actually, there is a lot to learn from policy in other parts of the world, but a lot of it is what not to emulate as much as it is what to emulate. And I think it's that discernment that's necessary, working locally and then bringing that through. And I also think it's about understanding that everyone has their own interests in these places. You go to a country like the Philippines and you can speak to 2 different big utility companies and they are lobbying the government to do completely the opposite thing on energy storage. So you have to work out how to get somewhere in respect of a sensible position that can then allow everyone else who wants to deploy the technology and fund it to then get the comfort they need.
I think one thing I've certainly noticed from the work that I've been doing in sub-Saharan Africa is that these countries really want to learn from the experience, both from the financing, how this money's flown in, from the development perspective, from the technology perspective. So it's part of our obligation, I think, as people who have been involved in an industry that's been involved in developing storage to actually share that with the industries that are looking at us as well for things like best practices and benchmarking and things like that. I've already got time for one more question if there's any other questions. Okay, we'll take both the questions if they can be short questions, and then if they're directed towards the panel, you can pick which one you answer.
So, very short question.
Sorry, could you just say your name
sure.
and your affiliation?
Sorry, I'm Jose Valenzuela from the Department of Government at the University of Oxford. So from the financial sector perspective, does corporate buyouts, let's say Shell getting into the market of storage technologies, all of these large corporations entering the market, make any change in terms of risk assessment from your perspective?
Okay, and we'll just take the question behind as well, if you want to make that.
I have a statement, actually. Can we just call a spade a spade? I'm just wondering what this idea of green bonds and being good for the environment is, because there's a complete disparity in the reality. And it's just, the green bonds is a label. Okay, let's look at the biggest 3 private issuers of green bonds. You know who they are, right? Engie, 75% non-renewable. LC Chem, Korean petrochemical company, number 2. Number 3, Industrial Bank of China, the biggest funder of coal. So let's just call a spade a spade. Okay,
so 2 questions. The first one on, we'll leave the second one for the moment and come back to it. With the first question on the role of Shell and what they've been up to in storage, does anyone want to touch on that?
I mean, I will. I've said this before, and I'll happily stick to my guns on this, which is I think their sudden pivot is on one hand, it's good that they change direction. Is it enough? Is it a big enough portion of their investment and their use of their balance sheet? I think it's far from that, and I think it's inadequate. Is it helpful to bring through technology? I actually think that one of the biggest challenges that we see is at the top level, governments, large corporates globally all like to talk about the need for innovation. And at the bottom level, everybody that's innovating struggles for a long, long time before they get their innovation anywhere. And then what happens is, rather than having the opportunity to blossom to become a real challenger, they get scooped up at some point before they've actually reached a threat level. And I think that's exactly what Shell is doing at the moment. And I'll be very open about this. My feeling is that there are a lot of very good companies, a lot of good innovations, and I don't think they will reach their full potential because they feel that by being bought by a large multinational, that will accelerate. What they don't plan for is the inertia that they will inevitably find the moment they go into a large multinational, where decision-making processes, internal politics, all this kind of stuff slows them down. And I'm not going to reel off names of companies that this has happened to, but I've seen firsthand.
Have you received an offer yet?
No, and I don't. And I actually, I don't particularly want an offer, because I don't actually think that would be the right thing for a company that's got the objectives that we have to settle for. Because I actually think what you need is more competition. I think you need to support, so that rather than there being innovation and the Goliath, you actually have some real challenges in the middle. And that those challenges actually really change the agenda and deliver. And I think that it's all too easy for the big guys to sweep in at any point in time and to subsume them. And actually, there's a few companies that's happened to recently, and they're already suffering. So that's my view, and I'm very happy to air that.
Okay. And we've seen a lot of acquisitions this year in this space as well. And even yesterday, EDF made a big announcement about a large company, that they've been buying as well. So yeah, lots going on. Chris or Shrey, I guess the green bond question is probably towards one of you two.
Yes, and I mean, to answer it directly, when you say a green bond is a label, and if your use of proceeds meet the green bond principles as set by the industry, you qualify as a green bond. You're right. I mean, that's what it is. It is a label, but it is the first time the investment community has been able to have a strategic conversation with the likes of the issuers who you're mentioning, including ICBC, about the projects that they fund and their role in the transition. Now, let's give you an example for the green bond guidelines in China. When the green bond guidelines in China were introduced, fossil fuels was included in one of the use of proceeds. That's now changed. Now it's not part of it. So you can't issue a green bond in China under the PBOC's guidelines if you're funding or refinancing fossil fuel projects. So it's moving in the right direction. I think the other conversation is around transition bonds. And now there are issuers who are within industries which are not traditionally green industries who are wishing to invest in or issue in green paper. Because there's so many investors who only accept paper, which is green now, and investors are sort of saying, unless you have a group-wide strategy, which is objectively and scientifically verifiable as to how your use of proceeds are either reducing your greenhouse gas footprint or your revenue footprint within brown industries, we won't fund you. Now, that hasn't happened before. So for a market which started in 2007, with an issuance from the EIB, and supranationals are still one of the largest entities issuing green bonds, I think we've moved a fair way. And if non-green paper is being replaced by green paper, I think it's a good outcome.
Just very quickly, I think that shift is actually, we can really see a result, because coal-fired projects now find it very difficult. Of course, that's one end of the spectrum. Very difficult to find money from commercial banks. And that's because of pressure from the finance community, the investor community, which are you.
Storage as well. That's a great opportunity for storage combined with renewables. Yeah, and Chris, did you want to make one
last
last
point
on that?
Well, I would just caution that we have to be very careful about actually defining what it is that we're talking about here, because green bonds are instruments. They're not the projects themselves. The credit risk, it depends on what green bond it is, because about 80% of it is issued on a use of proceeds basis. So therefore, the risk is the credit risk of the entire issuer. And what is happening there is that the issuer is giving an opportunity for investors to selectively finance one part of the balance sheet on a use of proceeds basis, right? There's a whole nother question about whether it's a genuine effort to express an issuer when it has a balance sheet that's completely dominated by coal, for instance, and then it issues a green bond. That's a completely different conversation, and it should honestly be questioned. We need to assess, and we do on a case-by-case basis, the strength of the green framework of the bond and the plausibility of the transition of the parent issuer. And so this is when we get into discussions about, oil companies making acquisitions in strategic spaces, is that going to be a plausible transition strategy for them to a net zero world? Or isn't it? Is it going to be just putting lipstick on something else, or is it going to be, a fundamental shift of a business model? And honestly, it's very interesting to look at this because there's a great example of a company. There's a company in the Nordics that used to be essentially an oil and natural gas company, and it has completely shifted its business model over the last 10 years to become one of the world's leading offshore wind companies. So it is possible to make that transition. Not every be able to do it, and they're going to be stranded assets, and they're going to be companies that simply disappear and get disrupted. So it's going to be a very difficult journey, but there are actors out there that are definitely making steps in the right direction. And a green bond, the way we've seen it and the way we've experienced it, is a very good financial articulation of something that's normally quite arbitrary or doesn't have much power behind it. Anybody can put out a sustainability strategy and say, I'm going to do this by that time. But if you're actually putting financing behind it, that makes it much more credible in the eyes of the market.
Yeah, okay. I think we'll wrap up there. So we've touched on, we've got 2 minutes? Yeah, we'll stop there. Okay. There was a 10-minute sign, and then there was a 2 minutes, and I think, anyway. Okay, we'll go for 2. So we touched on lots of different topics throughout that. We talked about the opportunities for storage in emerging markets, some of the challenges that we face at the moment. It was really interesting to hear about the different financing mechanisms that we have and the role that CTF will play. And it's amazing. It's great that we've got this mechanism there, and that we need to make sure we now utilize it, and that as industry we take on the obligation to make sure we drive storage into these emerging markets to allow then the next step and wave of funding to come in and take over and change our future systems. So thank you very much, panelists. That was really interesting, and it was a pleasure to chair the panel today. If you could all put your hands together for the panel, that would be much appreciated.
So now I'm pleased to welcome Mafalda Duarte to the stage to offer concluding remarks.
Very short. In fact, I could even start while. So this morning, I sort of set up 3 expectations. So I'm going to ask you to show of hands under each of these. Did you learn new things? Did you meet new people? And do you think you can come out of this with relevant partnerships? Less. Good. So I think at least my expectations have been met. Thank you again very much for having come. We decided to mark the launch of the new program, our new global energy storage program, by bringing this community together here in London. And as you can see, it's a very diversified community, but we do think it's critical because deployment of energy storage is still nascent in developing countries. These are the markets that we are concerned with and we want to support. So we really think that it's critical to bring all of you together and allow you to learn and meet and think about new partnerships with our implementing entities, the Multilateral Development Bank, so that we can together start making a difference. I mean, it was very interesting, the presentation in the morning by Bloomberg New Energy Finance, and and seeing what they forecast the trends to be in terms of energy storage deployment. But it will require a lot, in particular in developing countries. We know how difficult it was, even though the technology costs came down, have been coming down quite dramatically, how difficult it is, and that there's a lot of things that need to happen, from the regulatory environment all the way to reducing capital costs and addressing other barriers, how difficult it is to actually get these investments to scale up in developing countries. So now we face similar challenges in terms of storage and deployment of storage solutions in developing countries. And that's the reason why collectively we also decided to set up this program and concentrate our efforts and finance into this. I've heard very clearly that knowledge and learning is going to be very important, and bringing the regulators and off-takers and others together. So we will be trying to do this. We are working very closely, my World Bank colleagues here, working very closely with the World Bank colleagues on the energy storage partnership, and we do think that this partnership will bear strong fruits as well in that area. So not to keep you waiting any longer, just giving you another last opportunity to achieve those same expectations through a reception outside. Enjoy, and thank you very much for having come.